Price and volume relationship. This is the traditional definition of the price and volume relationship, right? If the price is going up, if the volume is also increasing, traditional definition says it is uptrend. And now because volume is supporting uptrend, we need to look for a long entry. If that is the case, look at this chart. So this is not a small company. This is a very big company in India, Reliance Industries. Price went upside, right? Volume also increased. Then why the price came downside? It's a question, right? Think about it. Now one more question. This is also comes under the traditional definition of the price and volume relationship. If the price is falling, if the volume is increasing, it says it is downtrend supported by volume. Look for short entries. Okay. It says if the price is falling, if the volume is increasing, it is downtrend. Look for short entries. But look at this chart. This is also one of the big company in India. Price is falling. Is that clear? Volume is increasing. So we need to look for short trade, right? But why the price went upside here? Can you answer this question? Can you think about it at least? Now, one more question. It is one more definition of price and volume relationship. If the price is going up, if the price is increasing, if the volume is decreasing, it says volume is not supporting for uptrend. So we need to exit all our long trades. That's what it says, right? Look at this. So this is once again a Titan company. From here to here, observe the price and volume relationship very carefully. Price went upside, right? Volume decreased. So according to the previous definition, we should exit our long trade, right? But if you exit your long trade, can you imagine what would have happened? You would have missed wonderful opportunity to make profit, right? Do you still think traditional definition of price and volume relationship works in a proper way? Do you think about this? See, before I explain how do I use or how to use price and volume relationship in a proper way, we need to understand what is volume itself. So volume in the stock market means the total number of shares traded in a specific time frame. In simple manner, let's say I will buy one share of Infosys, you will sell, you have some shares of Infosys, so you will sell one share of Infosys to me. I will buy one share, you will sell one share. This becomes one volume. So which includes buying and selling, right? So this becomes one volume. Suppose if I buy 100 shares, assume you have 100 shares already in your portfolio, you will sell 100 shares to me. In that case, volumes become 100. Is that clear? So this is the normal definition of normal understanding of volume, because some people, they not even know this. From here, we will start. Now, before I explain how to use price and volume relationship, we need to understand how the volume or price are interconnected with each other. So I will take a very simple example. Let's say in the outskirts of a city, let's assume there is a metro city, very outskirts, there is a gated community. It has plenty of sites. Assume there are a lot of plots are available, because that's how stock market works, right? For normal retail traders, there are many opportunities to buy and sell any number of shares, right? So we will go with the same scenario. There is a gated community which has plenty of plots. Okay, lot of plots are available. Now, on an average, 100 sites, it happens, 100 people will buy the site, same 100 existing buyers will sell the site, which means volume is 100, right? So every day. Now approximately assume, because every site price will be different, but for a convenience sake, just assume every site price will be at 10 lakh rupees. People are buying and selling at 10 lakh rupees. Okay. So this is a simple assumption. Now let's say on the next day, there is a news, metro is coming very close to the gated community. There is a news and government also announced it officially. Now, do you think the site rate remains the same? Definitely no, right? It will start increasing, right? So let's assume if the earlier price was 10 lakh rupees per site, it will go to 15 lakh rupees per site, right? Now you might see increase in the volume whenever the price goes to 10 lakh to 15 lakh, but once the price goes to 15 lakh, you might not see the increase in volume. There is a possibility. In fact, in some cases, you might not see increase in volume from 10 to 15 itself, because some people who already holding the sites, they might come forward and they might sell their site, but not all the buyers will sell the sites, right? Whenever they hear the news, so they even think that we need to encash the benefit. So some people might hold their sites, or they stay away from the selling. But even if you think, many people will come forward and sell the sites, so once the price reaches the threshold level, in this case assume 15 lakh is the threshold level, you might see increase in the volume from 10 to 15 lakh. But do you think uh, you will see increase in the volume after 15 lakh? No, right? Because uh, buyers think, the new buyers think, so earlier the site price was only 10 lakh rupees, now the site price is 15 lakh. So they might not be interested to buy the site at 15 lakh rupees. They prefer to hold for some time, or they prefer to wait for some time and to see the price fluctuation. Similarly, people may not come forward to sell at 15 lakh, because very few people might sell the sites at 15 lakh. But once the price reaches 15 lakh, some people, because definitely many people would have bought it for an investment perspective, right? So they will hold it actually. So you might not see increase in the volume. Okay, so this is one scenario. Now let's see the same community. Now get rid of the metro news. Metro is not coming there. The same gated community, 100 sites sales happening daily, and approximately per site value is 10 lakh rupees. Now assume this is the same scenario. Now let's assume there is a legal case, legal issue starts with the gated community. Let's assume people will come to know that there are many legal cases are going with the gated community, the new legal cases. Now do you think site price remains the same? Definitely no, right? The site price will definitely come down. Let's assume in this case, whenever people hear the news, some people might rush in and they will try to sell their site at any rate, as soon as possible. But once the price reaches the threshold level, let's assume in this case the threshold level is 7 lakh rupees. So the price fell to 7 lakh rupees because of the negative remark of the legal case. Now price came down to 7 lakh rupees per site. Now do you think volume will increase after 7 lakh rupees? No, right? Because many people, they think that why should I sell my site at 7 lakh rupees? Let it be there. I will hold it for a long term investment perspective, and I will hold it. I will not sell my site at 7 lakh rupees. See, you might have that intention, and volume might decrease in between 10 to 7 lakh only, but still after reaching a threshold level, in this case I'm assuming it is a 7 lakh rupees, people will not come forward and they don't prefer to sell their site, right? So in that case, volume will increase or decrease? Think about it. Volume will definitely decrease, right? But the price might still go down from 7 lakh. It might still go down. There is a possibility. Again, depends upon the people perception about the legal complication. It might go down, but volume definitely will come down, right? Because people will not sell their site, because they will think, let it be there. I don't sell my site. So volume might go down, but the price also can go down. So as per the traditional definition, don't assume that if the price is going down, volume should increase. There is no possibility. This is a simple example I'm taking so that everybody can understand it, the real time scenarios. Still same thing, right? Volume, definitely decreases, right? Now, my final conclusion is, see, consider if you look at the site rate also, the site rate can go down with an increase in volume. Site rate can go down with a decrease in volume also, right? Because of the metro scenario. Similarly, site rate can go down with increased volume. Site rate can go down with decreased volume also. It all depends upon the supply and demand. People perception about supply and demand, both the cases, the real supply and demand, and how do people think about it, the supply and the real supply and demand. So based on those two things, price might go up or down with increased volume or decreased volume. The same logic applies to here as well. Why do you think stock market is different? Because the same set of people with the same mindset will come to stock market and they will buy and they will sell the shares, right? So don't you think the same logic we should apply in stock market as well? So my final conclusion is, price can go up with more volume, price can go up with less volume. Similarly, price can go down with more volume, and price can go down with less volume as well. I know it's very difficult to believe, friends, because the traditional definition, it's very, you might have heard the traditional definition in many sources, in many books, and you might think that is the universal truth. But unfortunately, if you look at the supply and demand, that is not the real truth. So once again, I will tell you, don't trust my words as it is, because at any point of time I will say, always don't trust my words. You go to charts, you take the stocks, take top 50 stocks, you observe all the scenarios, observe the same scenarios in 100 charts. Observe whenever the price went up, always volume increased or not. You observe whenever the price came down, you observe whether the volume increased or not. So if you observe this combination at least on 50 to 100 charts, you will realize price can go up with more volume, price can go up with less volume, price can go down with more volume, and price can go down with less volume. Okay, now I know it's very difficult to trust or believe, but it's up to you. If you want to uh, 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 confirm it, you go to charts, check it on 50 charts. Now, moving ahead, the real question is it necessary to analyze the volume every single time? In fact, it is not necessary to analyze the volume every single time. So volume analysis is needed only at the time of breakout or false breakout, or if you are a trend following trader, if you spot a entry opportunity, you need to analyze the volume with respect to the price only in such scenarios. So let me explain in detail. See, this is a Reliance Industries daily chart. This is a resistance trend line, right? This is a proper resistance trend line. I've connected 1, 2, 3 peaks. Now the price came here. It displayed a big breakout candle. It's not a proper breakout above the resistance trend line, but the price came here. It is very close. If you look at the big bullish candle, it looks like the price will break the resistance trend line and then it will go up. You need to analyze the volume only in such scenarios. Suppose if the price is here, let's say it's here, you don't have to analyze the price, analyze the price and volume relationship. So only at the time of taking the entry, you need to analyze the price and volume relationship, right? Now, another company, so Titan company. Let's assume you are a trend following trader. Do you agree this is a support trend line? The price is in a strong uptrend. Price, I've connected, couple of peaks, 4-5 peaks. Price now came back to the support trend line. It displayed couple of bullish candle. This is one of the bullish candle. It looks like a hammer. So this is one bullish candle. Now, if you are a trend following trader, you look to take a long trade here, right? At this point of time, it is necessary to analyze the price and volume relationship. So in between, if you don't have any plans to take the trade, then there is no need to analyze the price and volume relationship. I hope this is clear in your mind, right? Now, The question is, how then, what is the necessity, or how do we analyze the price and volume relationship? See, you don't find this information in any other source in internet or in any other books. I have mentioned this in one of my book. So apart from that, you don't find this information in any book, right? Friends, see, how do I see the price and volume relationship is, there are two things. Okay, so do you agree this is a proper resistance trend line, this is a proper resistance trend line, I connected around 3-4 peaks. Now the price is here. Now let's assume I'm a breakout trader. If I am a breakout trader, I will look to take a long trade, right? Now if I have a supporting view saying the breakout will happen, the price will go up, I feel comfortable. Only in such scenario I need to analyze the volume. So how do I analyze the volume is, it is not necessary to analyze the volume on every single day. You just mark the biggest volume spike. See, this is one of the biggest volume spike, this is biggest volume spike, this is volume spike. Now just mark couple of few volume spike. You don't have to take the data of last 2 years, 3 years. If you're analyzing a daily chart, last 6 months to 1 year data is enough. If you're analyzing weekly chart, last 2 years data is more than enough. Okay, just mark the volume spike. You just see, okay, just looking at the color of the volume candle, don't think it is a bullish or bearish, because this is where many people goes wrong. Whenever they see green color volume bar, they think that it is a bullish. If they see a red color volume bar, they think that it is bearish, but that is not the case, friends. You need to observe what happened to the price with respect to the volume candle. See, for example, in this case, the first one highlighted, see here, there is a big selling wick, right? There is also a small buying wick, but this is a bearish candle. Okay, so this is a bearish structure, this is bearish, but you should also see what happened on the next candle, because if the bears are really strong, if the volume is supporting, next price should also go down, right? That is why we say price is king, price is God, Bhav Bhagwan hai. So see, in this case, this is a bearish candle, it is true, but next day there is a doji. See, whatever the bearishness created in this candle, it is kind of negated in the next candle, because in the next candle it failed to go down. So we can consider this as a neutral volume spike. Okay, so this is neutral. I will just make a note of it so that I will remember. So the first one is a neutral volume spike. If you come to the second, see this, if you just look at the volume candle, you might think that it is bearish, but if you observe this candle very, very carefully, 50% is a buying wick, close to 40-45% is a buying wick, remaining 50% is a candle, right? So 50% buying wick indicates buying, which means even though this volume bar looks red, this in this price candle, 50%, at least 40% of them are buyers actually. So at least 40-45% of them are buyers actually. Now also look at what happened to the next day actually. So next day the price, definitely it's like a bullish arami, right? It didn't go down. It stayed sideways to, then it went upside, right? So this is a bullish volume spike. So first one is a neutral volume spike. So second one is a bullish volume spike. Look at the third candle. So in third candle, it is a doji, and then price fell down. So this is a kind of negative actually, because doji is neutral, but next day price went down. So it is a bearish, so negative. If you observe this, this is a positive. It is a very big bullish engulfing candle. Next day also price went upside. So it is a bullish candle. Now if you come here, see this also look like a bearish candle, but again it's 50% is buying, right? So this is the candle with, this is the volume spike. If you look at this particular candle, so 50% is buying, right? Also next day price almost stayed sideways. So either you can consider this as a neutral or positive, but neutral is fine. I'll consider this as a neutral volume spike. Here also it's a big volume spike, friends. But see here, close to 30% is a buying volume. Okay, so this is a, you can draw a trend line, support trend line like this. So in this candle, price tried to break the support trend line, but again, there is no follow through. Buyers pitched in, and next day also price went into sideways mode. So this is not a negative volume spike. So either you can consider this as a positive or at least neutral. Even if you consider this as a neutral, so total, so out of 6 volume spike, we have 3 neutral volume spike, 2 bullish spike, 1 negative spike. So what, in this period, what this volume spikes are indicating is mildly bullish actually. So 3 neutral, 2 positive, 1 negative. So it indicates mildly bullish. So there is a high possibility of price going on the upside. This is how we should analyze the volume. You can see the result. Okay, it went upside actually. So we will do the analysis of one more stock. So it is TCS. So in TCS also, again, this is a proper resistance trend line, right? The price went, it tried to break the resistance trend line. Now we should see, suppose if you are a breakout trader, you wanted to know the price will go upside from here or not. That's the question, right? Now if you analyze this, for example, this is it looks like a big bearish volume spike, right? But if you see here, this candle, this small candle, it is like a doji, right? This is like a doji. On next day also price went upside actually. Okay, so this is like a doji, small. The candle looks like a bearish thing, but next day it's kind of sideways. This thing, so you can consider this as a neutral. Okay, the first one is neutral. If you look at this, so this is around 30-40% is a buying wick. Next day price went upside actually, so you can consider this as a positive, mildly positive. So on this particular day, see this look like a big bullish candle. This one, the price action looks bullish, but next day you see what happened. The price came downside, right? It is a selling wick. So even though this volume spike looks bullish because of the color, but next day it went downside actually. So you can consider this as a neutral. Okay, so this one, it looks red color. It is a bearish price action, price sideways actually. So you can consider this as a neutral once again. And look at this. This is looks like a green color, big price action, but next day price went into sideways. It didn't go up from here, right? It's not a big breakout actually. So you can consider this as a neutral volume spike. So in these two, price went downside, right? These two price went downside, didn't go up actually. So it is a proper negative bearish spikes. And in this case, the price went upside, so you can consider this as positive. So this is, you don't have to consider this. If you consider, you need to check because we don't get the follow through. But if you want to consider, you can look at the selling wick. There is a selling wick. So basically around, in this case, 4 neutrals, 2 positives, 2 negatives, which means 4 neutrals. Neutrals you can ignore, 2 positives and 2 negatives, which means bullish momentum is not there. There is a high possibility of price getting into the sideways mode. That's what the volume analysis says. If you look at the result, see it didn't go upside from here. Price clearly went into sideways mode. Okay, so this is how one should do the analysis of price and volume relationship. So if you have any questions, what you can do is you can drop an email to me at indrajit.s@gmail.com. So I will also mention my email ID. So we can also do one more exercise. What we can do is I will go to charting, and I will also see the breakout stocks and whether we will also analyze the price and volume relationship. So I'm selecting short-term breakouts here. Okay. So this screener, what it does is it shortlist. There is a formula here which runs in the background, and it shortlist the stocks which are bullish for the short term. Today what happened was market showed some correction, so there is a less possibility of getting some breakouts. Okay, it is there anyway. Robust hotels is there, so we can check robust hotels. Okay, see friends, there is not much of a trading activity here, and lot of selling wicks, lot of buying wicks, lot of gaps. So personally, I don't suggest to trade these kind of stocks actually, because it might trigger your stop loss unnecessarily. So I will look for something else. Easter Industries. This is also not a smooth price action because lot of selling wicks, lot of buying wicks, lot of gaps. But anyway, if you try to analyze this, see this is a see here, this volume spike does not belong to this. Okay, it belongs to this. Okay, so in this particular day, it's a big selling wick, right? Selling wick is more. So what I do is, okay, so selling wick more, next day price went into sideways, so we can consider this as a negative to neutral, but even if you consider neutral is fine. See this volume spike, it is negative because big 40% is selling wick, next day price went downside, you can consider this as negative. If you consider this also negative because there is a selling wick and price went down next day, so you can consider this as a negative. And this one is negative because big selling wick, next day price went downside, so negative. So there were 3 negatives, 1 neutral. So even though the breakout looks very strong, there is a high possibility or high probability that price might witness sideways moment actually. Okay, now we will check something else, some good company. You can Deepak Fertilizers, we can check Deepak Fertilizers. Okay, yeah, this is, we can do this analysis. See, for example, in this case, the price, some selling week, next day price went downside, so this we can consider as a negative. In this case it is negative, big selling week, next sideways, so we can consider this as a negative. Where are the volume spike? This is one of the volume spike, it looks bullish because next it is a bullish candle, next day price went upside, we can consider this as positive. There are not much volume spike here. Even if you consider this one as a volume spike, price went upside, there is a selling wick, but next day also price went upside, you can consider this as a positive. So 2 negatives, 2 positives, not much clarity, it might go upside further as well. Okay, that's what the volume analysis is. Anyway, by the way, this is not a buying or selling recommendation, friends. I'm just sharing, how do we analyze the price and volume relationship. We can see Lux Industries. For example, if I go to Lux Industries, okay, so we need to analyze these many volumes and these many volumes as well. It looks bullish as of now because the next day less selling week, next day price went upside, here every time price went upside. So as of now it looks bullish actually, the price and volume relationship. Okay, so now if you look at something else, for example, if I look at Technocraft, for example, see it, you can draw a trend line like this. So now it is at the time of breakout, at the time of making this video. I'm making this video on 29 July. So at the time of making this video, it is a kind of a breakout, right? Now you can analyze these many price volume. So this is negative because selling week, next day price went downside, so this is negative. And if you analyze this is negative because bearish candle, next day price went downside. So this is negative. See, this looks like a bullish volume spike, right? But see on what happened on that day, it is a big selling wick. Next day also price went downside. So this is not a bullish volume spike, friends. This is actually bearish volume spike, negative. So here it is kind of positive because it went upside. There were two positives, and here price went upside. It is a positive. So next one is positive because 50, even 50%, 60% is a buying volume. Next day also price stayed sideways. This one is a neutral because even though there is a selling week, next day price went upside. So this is neutral. The next volume spike, if you analyze this, also neutral. If you analyze this volume spike, it is negative. So now we have four negatives, four positives, and two neutrals in this case. So as per the volume and price analysis, there is a high possibility of getting into sideways. It might not go further upside. There is a high possibility of price getting into the sideways mode. Now if I look at some other companies, for example CMS Infosystems, this one again it is already rallied already, so there is no need to analyze this. If you check old temp, for example, if you check old temp, it looks like a breakout thing. We need to analyze at least some of the volume spike. So this one is a negative because there is a selling wick and next day price went downside. Negative. The next one is also negative because selling wick, price went downside. This one is positive because this one is neutral because kind of negative only. This one is positive. This one is negative. This one is neutral because there is a buying wick but also price went into sideways mode. This one is neutral. This one is positive. Now it is a breakout. See, in this case, 4 negatives, 2 positives, and 2 neutrals. There is a high possibility, there is a high possibility price will get into sideways mode and it will come back. There is, I don't think it is a good breakout or buying trade opportunity. So this is how one should do the analysis. Always don't run behind the traditional definition. So you can check many charts. For example, if you go to some other stock like HDFC Bank, it is not very clear. You can see here. See, we always think price will go up with an increase in volume, right? See here, price went upside from here to here, close to 1000 to 1600. It's almost how much percent? There is no volume, right? Volume is less actually, isn't it? Compared to the volume here, it decreased, right? And price went upside. Can you recall my plot example in a gated community? It's almost the same logic, right? So here the price went upside with increased volume actually. So I have a suggestion for you friends. If you are doing the price and volume analysis, if you plan to use volume, so what you can do is go to volume, go to settings. Instead of green and bar, make it black actually. Green and white, make it black. So if you do this, you will not develop an bias actually. So you don't think this is as a bullish volume spike or bearish volume spike. You consider it as a neutral. Then you see what happened with respect to the price candle with respect to this volume spike. So this at least get rid of your earlier bias. Whenever you see green color volume spike, you automatically think it is a bullish volume spike. Whenever you see a red volume spike, you automatically think it is a bearish volume spike. So at least it removes that bias actually. See here, price isn't clear sideways, but volume increase actually. So all those things will happen. So whatever I explained with respect to the price on volume spike, don't run behind the traditional definition. You can check yourself with 100 charts on different stocks. My session is follow whatever I've explained, mark some of the important volume spike, and just observe what happened with respect to the volume spike on price candle, whether the price displayed a bullish candle or bearish candle. That is one thing. And the next day follow up on the next candle, what happened, price continued up further upside, or it stayed sideways, or it went downside. So look at these two things, then mark that particular volume spike as a bullish volume spike or bearish volume spike or neutral. Then you can take a decision. I hope this video is really helpful, friends. If yes, please like the content. You can share with your friends. See you in the next video with another useful content. Thank you. See you. Bye bye.